You know what's wild? You could have the best trading strategy in the world, literally a system that wins 70% of the time, and you would still lose money, and it wouldn't even be close. You'd be down 40%, 50%, maybe even blow up your entire account in 6 months, all because you couldn't sit still for 4 hours without clicking the buy button. This happens to so many people, it's actually frustrating when you look at the numbers. My name is James, and I spend way too much time thinking about why smart people make terrible trading decisions. If you're someone who opened a trading account thinking you'd finally take control of your financial future, only to watch yourself make impulsive decisions that cost you hundreds or thousands of dollars, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Because here's the thing, and I need you to really hear this, patience isn't just some soft skill that would be nice to have. It's literally the mathematical difference between making money and losing everything. Let me show you some numbers that should honestly terrify you. According to a 2023 analysis of over 1.6 million retail trading accounts, 89% of day traders lose money. But here's what's really interesting. When researchers dug into the data, they found that the average losing trader made 4.2 trades per day, while the average profitable trader made 1.3 trades per day. Look, that's not a coincidence, that's a pattern. The losing traders weren't failing because they picked bad stocks or didn't understand technical analysis. They were failing because they couldn't stop themselves from taking trades that weren't there. They were doing something instead of doing the right thing. Now you might be thinking, well, obviously more trades mean more opportunities to win, right? Wrong. And the math proves it. Let's say you have a trading strategy that wins 65% of the time, which is actually really good. Your average winning trade makes you $100, and your average losing trade costs you $100. Simple, right? If you take one trade per day, when your actual setup appears, you will end up with a net profit of $3,000 per 100 trades you take. But if you get impatient and take 4 trades per day, and only one of those 4 is actually your setup, you're now forcing trades that don't meet your criteria. Your win rate on forced trades drops to maybe 45%. Suddenly you're taking 300 forced trades that lose money to make 100 good trades. Do the math. You could easily turn that $3,000 profit into a $5,000 loss just by being impatient. This is where it gets really interesting. Here's what most people don't realize. Your brain is actively working against you when you trade. I'm not being dramatic, so there's actual neuroscience behind this. When you make a winning trade, your brain releases dopamine, which is the same chemical that makes gambling addictive. That rush you feel when you see green numbers going up, that's dopamine flooding your system. And here's the problem. Your brain doesn't care about your long-term financial goals. It wants another hit of dopamine right now. Think about it like this. You made a great trade yesterday morning. You followed your rules perfectly, waited for the setup, executed cleanly, and made $200. Your brain loved that. But now it's 11 a.m. the next day, and nothing's happening. The charts are boring. There's no clear setup. Your primitive brain, the part that kept your ancestors alive by constantly scanning for threats and opportunities, starts getting uncomfortable. We should be doing something, it whispers. That stock looks pretty good. Not perfect, but close enough. Just click buy. Do something. And suddenly you're in a trade that violates your own rules, and you don't even know why you took it. A 2019 study from the Journal of Behavioral Finance tracked traders' decision-making patterns and found that 83% of impulsive trades were taken within 90 minutes of either a big win or a big loss. That's not randomness. That's your emotional brain hijacking your rational brain. The researchers found that traders who implemented a mandatory 30-minute waiting period after any trade reduced their impulsive trading by 64%, just by forcing themselves to wait. Now that stat is powerful, but here's what it doesn't tell you: how to actually get good at waiting. Because knowing you should wait and being able to wait are two completely different things. So I need you to completely change how you think about waiting. And to do that, I'm going to use what might seem like a weird comparison, but stay with me here because this analogy is going to make everything click. The best traders in the world aren't human, they're crocodiles. A crocodile sits in a river for hours, sometimes days, completely motionless. To any animal walking by, it looks like a floating log. Nothing dangerous. But here's what's actually happening. The crocodile is working. It's studying patterns. It knows where animals cross the river. It knows the exact times deer come to drink. It's positioned itself in the statistically highest probability spot for a successful hunt. And then it waits. This isn't lazy. This is mathematically optimal behavior. Here's the thing. A crocodile's metabolism is incredibly efficient. It can go weeks without eating because when it does strike, the payoff is massive. One successful hunt provides enough energy for weeks of waiting. Now compare that to a house cat. A cat sees a bird, it chases, sees a mouse, it chases. It's constantly active, constantly burning energy, and it needs to eat multiple times every single day just to maintain that activity level. In trading terms, house cats blow up their accounts and crocodiles retire early. Be selective and your win rate jumps from 45% on forced trades to 65% on your actual setups. Plus, lower fees, less stress, clearer thinking. Patience literally makes you more money. Now here's where people really struggle. We live in a world that has completely destroyed our ability to be bored. You're standing in line at the grocery store for 30 seconds and you pull out your phone. You're waiting for your coffee and you check Twitter. You sit down to watch a movie and you're also scrolling Instagram. Your brain has been trained to need constant stimulation. Silence feels wrong, stillness feels like failure, and then you sit down to trade and the market is quiet, no clear setups, just watching, waiting. Your brain starts screaming, "This is boring. We need to do something." Check Twitter, see what other traders are saying. Maybe there's a setup we're missing. Here's what most people don't realize. Boredom is a skill you have to relearn. A study from the University of Virginia found that people would rather give themselves mild electric shocks than sit alone with their thoughts for 15 minutes. Think about that. Physical pain was preferable to boredom. Now imagine those same people trying to sit patiently through a slow trading day without forcing a setup. It's not happening. Look, professional traders aren't some superhuman species that doesn't feel boredom. They just recognize it for what it is, an internal signal, not an external problem. When they start feeling restless, they don't think, "The market is boring, I need to find a trade." They think, "My brain wants dopamine, but there's no trade that meets my criteria, so I'm gonna stay disciplined." That subtle shift in thinking is worth thousands of dollars. If you want to develop an actual patient trading mindset, not just wish you had one, you need to master 3 specific mental states. First, discipline. This is your ability to maintain structure under pressure. When you've missed 3 setups in a row because you weren't watching the charts at the right time, can you stick to your rules? Or do you start forcing trades to make up for it? Here's a real scenario. You had a target to make $500 this week. It's Thursday afternoon and you're only up $150. Your brain is panicking. "We're behind. We need to catch up." A disciplined trader goes, "My weekly target is a goal, not a requirement. I don't force trades to hit arbitrary numbers. I take good setups when they appear." An undisciplined trader takes 3 marginal setups on Thursday afternoon, loses $200, and ends the week down $50 instead of up $150. The only difference between the 2 traders is discipline. The second mental state you must master is patience. Patience isn't gritting your teeth through boredom. It's being comfortable waiting. Just like the crocodile underwater, not suffering, not bored, just present, conserving energy, waiting for the pattern it knows will appear. You need to develop that same comfort in your trading. The third mental state we must master is clarity. Can you think clearly under pressure? When you're down $300 on the week, can you still evaluate a setup objectively? Or is your emotional brain flooding you with fear and urgency? Clarity means you can look at a chart and honestly assess, this is a B+ setup, not an A+ setup. My rules say I only take A+ setups. So I'm not taking this trade, even when your account balance is screaming at you to do something. So how do you actually build this? Step 1, define your setup before the market opens and set alerts. Look, you need to know exactly what you're hunting for before you start hunting. Write down the specific conditions that need to exist for you to take a trade. Here's the thing. You shouldn't be staring at charts all day looking for trades. That's how you end up seeing trades that aren't there. Instead, you set your alerts and you walk away. The crocodile doesn't frantically scan the entire river looking for prey. It positions itself in one spot and waits for the deer to come to the water. When your alert goes off, then you look. Then you evaluate. Only then do you even entertain the possibility of a trade. If the alert doesn't go off, you're not trading. Simple as that. This removes 90% of the emotional decision making because you're not sitting there with your finger hovering over the buy button, wondering, is this good enough? The alert already told you the conditions are met. Now you just confirm and execute. Step 2, create a not trading routine. This might sound weird, but you need a plan for what you do when you're not trading. Because if you don't have one, your brain will default to, I should probably be trading. Here's what I mean. During slow periods, when your alerts haven't gone off, when there's no setup, what are you actually doing? Don't just sit there fighting the urge to click buttons. That's torture, and you'll eventually break. Instead, have productive activities lined up. Review your past trades and look for patterns in your mistakes. Study charts from different time frames. Read about market psychology. Watch educational content. Journal about what you're learning. Think about it like this. Professional traders aren't profitable because they're always in trades. They're profitable because they know how to use the time between trades productively instead of letting boredom push them into bad decisions. Your not trading routine should feel like work, because it is. You're training your brain to see market hours as more than just time to click buy and sell. You're studying, learning, preparing. And when your actual setup appears, you're mentally fresh and ready to execute, not exhausted from hours of fighting impulses. Step 3, reframe waiting as active work. You're not doing nothing when you're watching charts without trading. You're studying patterns, you're learning market behavior, you're conserving mental energy for when the real opportunity appears. Professional traders call this being in the market without being in a trade. You're engaged, alert, ready, but patient. Step 4, build your boredom tolerance outside of trading. If you can't sit through 10 minutes of silence without checking your phone, you can't sit through a slow trading day without forcing setups. The skills are identical. Try this. Sit in a quiet room for 10 minutes with no phone, no music, no distractions. Just sit there with your thoughts. It will be uncomfortable at first. That discomfort is the exact same feeling that makes you take bad trades. The more you can tolerate that discomfort in a controlled environment, the easier it becomes during live trading. Here's the reality nobody wants to hear. Trading isn't about finding the most opportunities. It's about finding the right opportunities that fit your trading system and having the discipline to ignore everything else. The math is clear. The data is clear. Patience isn't some nice-to-have personality trait. It's the fundamental skill that determines whether you make money or lose money. You're not trying to be the most active trader in the room. You're trying to be the most selective predator in the market, because remember, the crocodile can go weeks without eating. But when it strikes, the payoff is enormous. One perfect setup can make your entire week if you have the patience to wait for it. And look, I get it. Waiting is hard. It feels passive. It feels like you're not doing enough. But that feeling is exactly what the market exploits. Every time you take a trade out of boredom or frustration or impatience, you're giving your money to someone who has mastered the art of waiting. The traders making real money, they're not smarter than you. They don't have better strategies. They just have better patience. They've trained their brains to be comfortable with stillness. They've learned to see boredom as a signal to stay disciplined, not a problem to solve by clicking buttons. You can have the perfect trading strategy, the best chart setup, the most expensive software. None of it matters if you can't sit still and wait for the right moment. Build the mind that waits. Build the mind that takes small losses without chasing. Build the mind that understands stillness isn't weakness, it's strategic power conserved for when it actually matters. Because here's the thing, when you master patience in trading, you're not just becoming a better trader, you're developing a skill that will make you money in every uncertain situation for the rest of your life. And if this video helped you see patience differently, not as some soft skill, but as the actual mathematical edge that separates winners from losers, hit that like button so more traders can learn the art and skill of becoming a patient trader. Thank you for watching. Until next time.